So it looks like we'll have a little bit lower participation today, but we'll go ahead and get started, and we will record this meeting so that we can share the information out for those who aren't able to be on today. So with that, this call is following our usual format. The education advocates, along with district and county superintendents and board chairs, were welcome to participate, and that's the audience that we'll share the recording with after this call, along with any materials. So we are honored to have Dr. Patrick Barkey, the director of the Bureau of Business and Economic Research with the University of Montana, speaking with us today. He's been traveling around the state doing economic updates for various chambers and business groups. And he's going to talk a little bit today about the financial state of Montana as it might relate to school funding. But with that, I want to turn it over first to Superintendent Arntzen for any updates.
Thank you, Dylan, and thank you all for participating today. As we are reopening our schools, everyone's focus is on health and safety of our students and our staff. But this is a very interesting discussion as well, and I've known Mr. Barkey for numerous years, from when I was a legislator and also into this role as well. The economics of school reopening, I think, is more important now than ever, and where we are in our state as well as in our nation reflects on how we are as healthy as can be in our local communities that are represented here on the call, but also across our state. So with that, Dylan, let's learn a little from Patrick today.
Thank you. So Dr. Barkey, we'll turn it over to you. You should have the ability to share your screen if there's anything that you want to pull up. But with that, you can go ahead and present for however long you'd like, and then I'm sure there's plenty of questions.
Thank you, Dylan, and good morning. I think the ground rules here are pretty simple. You guys and gals are busy people, and whatever makes this presentation more useful for you, go ahead. I'm okay with interruptions. I have about 25 minutes of material to talk about. My business and your business don't overlap too much, except for right now. They overlap quite a lot because we're all concerned about the economy. When we sit here at the mid-year point and try to evaluate what's going on with the Montana economy, we normally ask a list of questions that goes something like this. We wonder how well the forecast we did at the beginning of the year is performing. We look around the state, see who's growing, who's not. We try to look ahead and see what the risks are for growth. We pay a lot of attention to things like inflation and interest rates because those matter so much to so many businesses and organizations. We worry about what the Federal Reserve is doing. And every 4 years, we worry about an election and what that means for the economy. And you know what? This is just not that kind of year. This is just not a normal year. This is a year where we have a much more primal kind of question facing us, which is namely, where are we now and what's coming up next? We have very much a short-term mindset. I know you probably do in your business as well, in terms of what's happening in the next few weeks, as we all do. So let me just start with what we do know about where we are now. And of course, we start with the COVID infections. This is the big story. This is a snapshot of new cases corrected for population, so new cases per 100,000 population since the beginning of the pandemic. And there's different colors here. It's a daily graph. It's right up to August 17th. And the reddish pinkish colors are the ones with infection rates rising, and the green kind of teal colors are the ones where infection rates are falling. And if there's any one lesson from this picture, it's that this is not going away. This has clearly been a public health issue that has not been solved. It's being managed, and it's being managed to the best of our ability by a lot of hardworking people. But it's not over. There's been no summer lull. It's surged, it's fallen, and no one knows exactly what's going to happen next, although some very smart people are thinking about that. That we know, and that impacts what we think about the economy. What we also know is that the economy, at least in the second quarter of the year, which obviously is now more than a month in the record books, the economy turned in one of the worst performances of all time in the second quarter. The U.S. economy declined by almost 33%. That's an annualized rate, by the way. So it doesn't mean literally a third of the economy disappeared. It's the annualized rate. It's really the rate for the specific quarter would be something more like 7%. But annualized, that's what it is. And you can see that that second quarter 2020 number is in dubious company with some of the worst quarters the U.S. economy has ever experienced since the 20s, the 30s, and the 40s. That's an ugly economic report. It's also a beginning of a recession that looks very different from anything we've ever experienced. When you look at what happened to the economy just 2 quarters into this recession that we're in, it's off the charts in terms of anything we've seen in recent history with respect to the path of the economy when it does go down. Much faster, much more severe. And of course, it's probably going to be much more severe coming up as well, but that much is not really in the record books yet. What happened? What happened is that consumers stopped spending money. If you look at the U.S. economy and you looked at why the economy went into reverse first in the first quarter, but then very strongly in the second quarter, and you just take a look at consumer spending, it had, up till 2020, been a source of dynamism for the U.S. economy. It grew every single quarter until we got to 2020, and then it shrank, and it shrank drastically. When you look at the other categories of economic activity, they also moved, and most of them moved in the wrong direction, but not as significantly as consumer spending. That's not the real reason why things grew. The only real thing that really helped, as I'm adding these bars in, was government spending ticked upward because of the big deficit-fueled spending by the federal government. What do we get out of this? What's this mean for Montana? A lot of what it means is for the country, but it's happening everywhere. So what happened, of course, is that consumer spending cratered. It was mostly for services. A lot of goods were less affected. It was a peculiar report. It was a quarter in which the economy suffered, as I showed you, one of the worst quarterly performances ever. And yet it was a quarter which, in that same 3 months, consumers who stopped spending actually had strong increases in their income, mostly because of what happened with the federal government transfers and UI payments. Weird quarter. Spending down, income up. What does that mean? That means saving. Consumers saved a huge chunk of their income. 25% was the savings rate, up from single digits. Peculiar quarter. Inflation was negative. Overall inflation, not all prices, but overall inflation was negative. And it was also a quarter when international trade collapsed. Giant declines in imports and exports, and that's really affected supply chains and a lot of things that we do. Here's a couple other takeaways, though. When you think about it, yeah, it was an ugly quarter, and the declines were huge, but almost all of the declines in the second quarter occurred in a single month, which is April. It looks like there was strong growth after April. In fact, if you look at the much milder decline in the U.S. economy in the first quarter, that was also in 1 month, the month of March. So March, April, that was ugly. We've had a considerable amount of rebound since then. The bounce back has been unexpectedly strong, both in jobs and consumer spending. We just saw a retail sales report that says retail sales are roughly back up to where they were before the recession began. And just to give you some insight as to how much volatility there is in the economy, currently, forecasters think that the economy is going to grow by 17% in the third quarter. Of course, that's just a forecast, and we're still in the third quarter, but down 33%, up 17%. This is an economy like nothing we've ever seen. But what this tells us is that when the economy switches back on, its growth can be just as impressive, almost as impressive, as when it's turned off. We do have large deficits. They're gigantic. We're not going to worry about those for the moment because I think the quick action of Congress has really been important in producing an economy that's gotten us to the point where we are right now. Congress is not the only thing. I'm not going to emphasize this too much for you folks. I just want to say very quietly that If you have financial assets, you should thank the Federal Reserve, because the Federal Reserve Bank, this is this long alphabet soup list of programs that the Federal Reserve has rolled out in a hurry that has essentially stabilized capital markets. So if you're rolling over debt, if you're doing ordinary financial transactions, you can do those today in an environment which is essentially free from the fear that financial markets are suddenly going to go illiquid and people are going to be frozen into what they have today. The ordinary transactions, which of course are very large in financial markets, have happened because of things. Just look at that second to last line. The Federal Reserve has bought over $2 trillion of treasuries. Actually, this is about a month and a half old. They've bought a lot more than that now. And they're doing lots of things behind the scenes, not getting a lot of ink about it. So what we have in the economy right now is something that's evolving. We have, compared to just a couple months ago, there's more optimism about 2020. We've seen consumers come back. We've seen some hiring, not enough to overcome the big declines, but still pretty good performance relative to how far we fell. So 2020, people are a little more optimistic about. We're less optimistic as 21 and 22, because it simply does not look like we're going to get this quick bounce back, things back to normal kind of situation that people rather naively thought we might be getting into earlier in the summer when the springtime pandemic wave had eased in so many states. We're going to see very low interest rates for at least a couple of years. That's certainly the case. Forecasters think we're not going to have any inflation. Markets are not as certain. Some financial markets are getting a little bit spooked by all the borrowings taking place. We have a much weaker dollar, not super important for schools perhaps, but important for a lot of Montana companies. And even with a strong bounce back, it's looking like this is going to be not an ordinary recession, obviously, but a recession like every other one that's going to take a while to dig out of. So a quick bounce back, but not a full bounce back. So in Montana, what do we know? We have more fragmentary data for Montana. It's always the case. One of the reasons why I put that list of things that we do at the summertime when we talk about the state economy is pretty modest, because we really don't have up-to-date comprehensive data about Montana. What we do have tells us a few things, and I'll share those with you. First, they say that first quarter in Montana was pretty good. Nobody really cares about that anymore, and I'm not going to dwell on it. But we had a fairly strong economy coming out of last year that continued in the first quarter. And the second quarter is when it went downhill. In fact, that was such a quick moving event that our own research center conducted an analysis to try to forecast, if you will, how the state was going to do in this downturn. And at that time, we said the state would see job losses and income declines twice as large as the Great Recession. So we were trying to jump into a informationless situation for the state economy and give Montanans a little bit of a heads up that this is where we think things are going, even though that was definitely a moving target. Unemployment claims seem to agree with that. Tax data don't. And so we've been looking at some different sources of data that have come available in recent months. We don't have a lot of experience interpreting this data, but it's rather exciting and rather interesting to look at it. And it seems to indicate that the state business activity has stabilized in the state. Let me share with you what we know. We know some things about employment. We can see employment up to 2020, steady growth. And then as we got into March, April is where all the ugliness started. And you can see the decline in Montana employment was just about as severe as the US, and there's been a little bit stronger bounce back. These data tend to be a little bit less reliable. I normally don't look at this particular source of data. And you notice I don't have July yet. That'll be out in a couple of days. But this is what people want to know. They want to know what's happening right now. My experience as an economist is that this data sometimes tell a story which changes when better data come available, and these are revised. But nonetheless, that's where we look at where we are now. So that certainly looks like a very severe recession, like we said would happen. It doesn't affect all industries equally. Some industries, most notably, here's one, construction. You can see that there was a big COVID turn down in construction in Montana, but not nearly as severe. In fact, it fell from a fairly high point. So that's what we know about employment. When you look at unemployment claims, which are the people who have lost their jobs collecting unemployment insurance, that's actually kept weekly. But if you look at it on a quarterly basis, it doesn't look very good. You can see it's very, very much higher, over 50,000 in continuing claims on average in the second quarter of 2020. That's really on line with what we had projected. But if you look at it in a slightly different way, which is done on a weekly basis, and this takes a little bit of explanation, this is looking at claims per 100 people, okay, the number of claims, and you can see that the big increase in claims happened, not surprised, in March and April. That was the worst time for the state economy, and you can see per 100 people, those claims have come back down. In current claims have actually come down to something close to where they were prior to the pandemic. And in fact, you see those very lightly shaded gray lines. That's the reason why I'm showing claims per 100 people, so I can compare us to other states. And those refer to all the different states around the country that have all kinds of different experiences in terms of timing, severity, cycles, and so forth. And you can see that Montana is among the better performing, in fact, one of the best performing states by this measure, even unemployment claims. I'm going to quickly talk about the work we did in May and June. We've actually updated it through July, but there's more information than this now, but I want to share this with you very quickly. And that is what we did to try to take a look at how we thought the economy was going to perform when we didn't have very much information. So we took a look at the forecast we made prior to COVID in December and compared that to one of May, which we then updated in July. Definitely a moving target, trying to get some insight on how bad things are going to be. And the conclusion of this analysis, it's not data, it's a model, it's a forecast, was that Montana is not going to be spared the pain of this. Just a couple of graphs to show you this. The employment projection prior to COVID showed a slight slowing down of state economic growth by that measure. After COVID, the forecast we made, we used April data, we produced it in May, showed a very significant downturn of almost 50,000 jobs. We update that through July. The story is not that different for 2020, but a little more pessimism about how fast we're going to have makeup growth to get back to where we thought we'd be. So these are some projections. When you look at those kind of projections for the worst year in 2020, and you look around the state, and you look at the projected job losses, this is not actual data because we don't have all of 2020 yet, but you look at where the job losses occur, and they basically occur where the people are, but they also occur in places where tourism-based industries and even healthcare industries are more prominent. So you can see the Northwest has the largest segment share of those projected job losses, and other parts of the state with fewer. Let me talk about some other data, though, because it's really, we've gotten this data on state revenues, and I would refer to them as encouraging. And they're not encouraging because they're growing, but they're encouraging because they don't look nearly as bad as we thought they would. So this is a rather busy table, but it's familiar to some of you because it's the state's largest revenue categories, the top 7 you can see in the top of this table. And what this does is it shows you fiscal years, which of course ended June 30th. There's been a little more data since then, obviously, and I'll talk about that in a second. But the big story here is that there's only been mild declines or even stability in some of the state's most important revenue sources, starting first, of course, with the individual income tax, which is a hard one to really talk about because the timing of that tax has changed with the settlement date for individual income taxes being pushed into July. But nonetheless, you can see flat growth, percent growth, very flat growth individual income tax, which is much, much better than those unemployment numbers seem to suggest. In fact, if you go all the way down to the bottom of this table, you see a general fund a hit of 1.6%, $40 million. That's certainly not welcome, and it certainly breaks a string of growth that the state has enjoyed. But in this kind of recession, to have a decline of that magnitude, when the worst months, March, April, were smack dab in the state's fiscal year, is pretty good. Now, in truth, there are a number of taxes which are faltering, and those are important taxes. You have the energy-related taxes, the severance taxes, lodging taxes began to falter, and that decline has continued as we get into the next fiscal year, which is not on this table, for which we just have 1 month's data. So hard to make a conclusion on 1 month, but there is some continued erosion in tourism-related taxes, rental car, lodging taxes down. But interestingly enough, things like income tax withholding, even into July, have managed to keep up fairly steadily. Does not look like a recession from some of those data. Let's talk about some other data. This is new data, which is interesting. This is a cool website called tracktherecovery.org, and it has a lot of data which are based on credit card usage. Obviously, Montana does not have a general sales tax, and there's an awful lot of Montanans that like that. But this economist wishes we had a sales tax for one reason, that is we'd have good retail sales data. Well, we don't need that. We've got these credit card receipt data, which has been compiled by a group of economists on the East Coast, and they break it out at the state level, and you can see the various dates of the public health decisions that were made in the state of Montana, which many of you are familiar with because it affected all of us a great deal. But the bottom line here is that if you look at the decline in total spending in Montana based on this credit card data, we're down at about 7.5%, and you can see that's a lot better than we were at the bottom of this in March and April, but not all the way back to where we were prior to the pandemic's impacts arriving here in Montana. But of course, when you look at some of these individual categories of spending, and this is kind of the neat thing about this site, not all of them are the same. This is one I just put up this for fun, although I do have some colleagues that work at grocery stores. They're awfully busy people these days, and you can see why. Even after the relative stability that occurred after the big rush of spring, they're up 8%, as clearly Montanans, like so many other Americans, have shifted away from restaurants and towards home food. And you can really see that from the next graph, which is restaurant and hotel spending, where you really see the impact, not of a decline of tourism per se, but in the decline of tourist spending, in particular the kinds of things they're spending money on, not restaurants and hotels. Those are down enormously from where they were prior to the pandemic, 46%, as you can see on the slide. So what else do we know? Well, there's some interesting things about, and I think some of this is getting a little more relevant for you folks in the schools. We have other pieces of data that tell us interesting things. It's less clear what they mean for the economy. This is something which is an index of mobility, which is kept for the state and for the state's larger counties. This is done by the Federal Reserve Bank of Dallas. Now, what the heck is this? This is a measure of how much Montanans move, and it's based on cell phone triangulation of the GPS in your cell phone. We can tell how much people move in aggregate. We can crunch it, look at total movement, compare it to where it was prior to pandemic. So this is the big cratering of movement that occurred. Just for reference, there's where the stay-at-home order came in on this timeline, and that's where it ended. So you can see Montanans were already sheltering in place, at least to some extent, before the order went out, and they already started coming out before the order was rescinded. But you can see, and this is the point of this graph, is that we've had a stability now. We've come back to I hate to use the term new normal, but it's coming out of my mouth, so there I just said it. You've got a different kind of society, if you will, in Montana. We're not moving as much as we used to, but we've stabilized. About 20% less movement. If you believe that, I've got some data for these individual counties. It doesn't really tell a different story, but it's kind of fun to put it up. I'll just put them up individually. There's Cascade, there's Bozeman. You can see that earlier there. Lewis and Clark, more severe. Missoula is right about average, Silver Bow is above average, and Yellowstone's right in the middle. So it's really the same story there, but it is kind of cool that you can put this data for different counties, and it's pretty much the same story for all of them. And finally, one more piece of private sector data, and that's this data kept by a company called Homebase. They are a staffing company for small and medium-sized businesses. I don't really know how good this data are, and certainly there's a lot of things funny about it, but just concentrate on that, let's see, the lightest line there. Good grief, I'm really color challenged here. Locations open. You can see that there's closures of business on Sundays. That's what this thing means. It's a daily data source. A lot of businesses closed for Easter and Memorial Day and July the 4th. You can see those. But what you can see, of course, is that overall trend of closures of a lot of businesses in March, April, and some recovery almost all the way back in terms of opening of businesses by this data. I don't know how good it is. Let me just close with a couple comments about a couple other pieces of the economy. I'll do this rather quickly. The first is the oil and gas industry definitely has been hit by not just COVID, but a lot of other things. And we have seen in recent months the largest declines in terms of monthly production declines in the Bakken that we've ever seen, both for North Dakota and for Montana, which of course are much different size in terms of players in the oil production, North Dakota being very much larger, but nonetheless, the trend is the same. And this is really a bad news story for Billings and points east in the state. Even the relatively modest declines in production that followed the 2014 price collapse of oil were painful in those parts of the state. And these are happening much more quickly. The question is what's next, and it doesn't look too good. Finally, I have a couple comments on housing. Housing has been, there's so many stories about the economy. I haven't touched on them all, and hopefully I've left some time for questions. We can get into a discussion of some of these things. But housing is its own story. Basically, the story with housing is that price growth has continued right throughout the entire pandemic. The real estate industry has been incredibly nimble in adapting to the fear that people have of going out and getting an infection by looking at a house, enter virtual house tours, etc. And so those markets continue to charge ahead. Now, what do I have here? This is a price index for Billings. I just have this for the metros. This is a price index, goes all the way back to 2000, so you can see the Great Recession, and you can see that this has gone up. I like this because I like it better than median home sales price because it corrects for the type of market that's selling. But you can see the price growth in Billings has continued right up through 2020. In Missoula, the price growth, the collapse was worse, but the price growth has been much stronger since 2016 with some big run-ups in that. You can see Great Falls has even had a little bit of a spike in the last couple of years, although it's slightly different dynamic. I don't have Bozeman, I don't have Kalispell, I don't have the non-metros, but I do have, I do have something called Montana non-metro, which is dominated by those more populated non-MSA counties, and you can see the growth there as well. So a big story in terms of housing. Just a couple comments. Just to conclude then. I have talking about where we expect Montana to go as we go forward. We're looking at the different industries in which I would classify K-12 ed as an industry, as I would my own higher ed. We're all industries, and what is going to determine how well we do in the coming months. And I score this using 3 criteria. The first is how much your industry is linked to risky or discretionary activities. So if you're an industry that brings people together, and unfortunately your industry is, and so is mine, it's going to be more challenged, and I know you know that. And discretionary activities are also ones which are likely to be challenged in the coming months. Person-to-person contact involves air travel, things like that. These are tough ones. Financial buffer is another one. Montana's a small business state. A lot of small businesses don't have a lot of financial buffer, and that's important. And of course, it's also important to consider how your industry is leveraged. And this is not a huge concern in K-12. I understand that. But if your business model requires steady revenue flow to pay down debt, you're going to be challenged by interruptions in that flow like we've seen today. So, Dylan, I'm going to stop there, and I'm just going to leave this slide up unless you want to go back to the screen or whatever people want to do. And I don't know if any questions have arrived or how you want to handle it, but I'm at your disposal.
Thank you, Dr. Barkey. That was really insightful. Are there any questions? Feel free to unmute yourself, especially since we have a smaller group today.
Patrick, I have a question. This is Elsie. You talked about mobility, and one of the things in how schools are funded is because we have children that come into our schools. And, that mobility in the housing market may not reflect, the public school system. It may reflect, that there is a different methodology of education. But because we are funded within the state by A and B, and the average and belonging is what that is, and I know you're aware of it. Is there anything that we can say based on our population centers, or is there a difference in rural Montana, depending on how families are moving around because of COVID?
Well, there's two ways to interpret mobility, right? I mean, the first thing is how much do people get out of their house, all right? And the second way to interpret mobility is where are people choosing to live? So let's tackle those separately, okay? So I think it's clear that Montanans are moving around. We've all been on the road. There's plenty of cars on the road, and whatever your busy street is in your town, it's going to be just as busy. It seems like that. So there is certainly been a return to mobility. There is evidence, though, that in terms of the way Montanans are working, at least, that we're moving less. I mean, there are more people who are working from home. There are more people consolidating their trips, and just talk to any UPS driver and he'll tell you that he or she will tell you that they're operating like it's been Christmas for the last 3 months. That's how busy they've been. What does that mean for schools? Unfortunately, that doesn't really tell you a lot because it doesn't tell you what people are willing to do with their kids. And so I don't read too much into that data yet. It does seem like a normalizing economy. I think the bigger issue, and this is just my opinion, and maybe I'll just state my opinion and that'll get everybody talking because you won't agree with me. But I think the bigger question is where people are living. In the sense that everything from, there's a lot of second homes in Montana, right? And people use those second homes and traditionally in different ways, but they're linked to Montana's attractions. Well, one of the attractions of Montana now is that we have a less dense population and we're perceived as being a less risky place to get COVID. So what's that going to do to schools? I don't know. I don't know if anybody from Big Sky is on this call or some of the communities with a lot of second homes, but I think that could have some important bearing on the school population in ways that I don't think any of us can predict quite all that well yet. Maybe you folks have a better handle on that.
And again, I don't want to monopolize the questions that I have from an economist to another economist. We've got a legislator session that's going to be looming in the next 4 months. And a forecast is what we can go on. So if I'm hearing what you're seeing and what you have put up on the screen, that the returns are coming in, that there may be some form or another of our diverse economy that is there, But when the legislature, they sit themselves in a remote world like we are now, or if they are up at the beautiful Capitol, your prediction of the next 6 months as we open 21?
Well, I'll tell you one thing about my prediction that I can predict with perfect accuracy, and that is my prediction will change. If there's anything we've learned, I mean, in May, we were very gloomy. It looked bad. It looked like a very big hit to personal income. I don't have any more confidence in what I think today than I thought then. It looks a little better in 2020 than we thought it would. There's no question about that. We're trying to figure out why. A lot of it is what happened with the federal government. I mean, the federal government helicoptered a lot of money into Montana, and it showed up all over the place. And obviously that's been temporary, and now we're moving into yet another phase where some of that is expiring. So my prediction right now is it looks like a milder downturn in 2020 than what we thought, but I do not think we will bounce back as quickly in 21 and 22. So, 3 months ago, I thought, my God, how are we ever even going to get to the regular session? It looked that bad. And now it doesn't look quite that bad, but there's no question it's a recession, and recessions are not fun times for state government finance.
Thank you.
Are there any other questions for Dr. Barkey?
This is Diane Burke. I have a question for Dr. Barkey, and I know this is all predictions, but if you look at the top sources of income for Montana and individual income tax, property tax, corporate taxes, it looks to me as though property taxes are probably going to stay pretty stable, especially if housing prices are continuing to go up with our 2-year appraisal cycle. And the individual tax and the corporate tax are some of the ones that we really need to worry about. The severance taxes, do you see any positive indicators for severance taxes over the next few years? And how much do you think the severance taxes are really tied to COVID?
Yeah, no, I agree with your assessment. Property taxes have been stable. I think the only risk you hear in property taxes is the possibility of default. I mean, we've heard these stories, and there's some truth to them, that there could be a spike in late payments or defaults that landlords face, and then in turn they might, we've heard these things, and it remains to be seen. I guess I'll just put it that way. You're exactly right. Income tax and corporate tax, corporation tax. Of the two, the income tax is going to be the one that's going to be more volatile with respect to the economy. Thus far, it has not. Now, I have to classify that as a surprise and one that merits continued scrutiny. But as of now, the income tax has been mildly affected, but nothing like we thought it would be. Corporate tax is a difficult animal to predict. We are not a corporate state. We have some very important and very valuable corporate citizens of our state, but we're not a state that's dominated by large corporations like some states are. The corporation tax is one that is frequently out of sync with the economy because of its legal provisions that enable corporations to spread out their liabilities and their income across multiple adjoining years. So often you see that tax not reacting as briskly. I wish I could say something positive about severance taxes. If there is any one good thing, is that the price of crude oil has quietly rebounded. Everyone knows that the spot price went negative on that 1 hour of that one day. But since then, prices have come back. Production levels have not. The situation with coal is even more tenuous. I mean, the state's largest coal producer was offline for a number of months this year. So that's there's really not much brightness ahead. And perhaps the biggest worry is for oil markets. I mean, if you're counting on that revenue from oil and gas, the biggest worry is that the consolidation in the U.S. industry may not be our advantage. I mean, it may consolidate in Texas, and in fact, the Bakken has got more challenges with pipeline challenges. I mean, it's its own special story. Sorry for the long answer, but it's not a very encouraging story ahead for the natural resources, unfortunately.
Thank you very much.
Yep, thanks, Dr. Barkey. At least the property tax stability would be good for school funding. Are there any other questions or comments for Dr. Barkey? All right, thank you for joining us, Dr. Barkey. We really appreciate it. Like I said, this has been recorded and we'll share it pretty far and wide. Superintendent, do you have any last remarks?
Thank you. This is a whole different type of learning, but as we fund our schools and want to make sure that that funding is secure going forward into the legislature, the more that we understand the challenges that COVID has given, not just our nation, but our state and our communities, the better that we can encourage our trustees and our school leaders to make these determinations. So with that, everyone, please stay well. School doors are opening. Patience, I think, is required of all of us during these uncertain times. And thank you all. Stay well. Thank you, Dylan.
Thanks, everyone. Have a good week.
Thank you.